Sensex Nifty opening in the red this morning, but I've had a very good session of trade ending in the green with Sensex up over 200 points, Suyash, isn't it?
Yes, so it was a green day for the markets, Krishna.
Just like us.
So, as you mentioned, Indian markets had a muted opening. Nifty slipped below the 19,600 levels, and in the last 2 or 3 days we have seen that the markets has been have remained largely directionless.
Right.
Finally we saw some momentum in the markets, and that too on the bullish side. Now Nifty at close was up about 50 points, up about 0.26%, and it managed to close above the 19,700 mark, which according to a lot of analysts, Krishna, was the near term resistance, and perhaps from here on we can see a bit of a pullback rally, if not a continued bull run. Now Sensex also gained about 170 points. The index also managed to close above the 66,000 mark. It ended at 66,118 levels. Now the bullish momentum was also seen in the broader markets. The broader markets, which were also trading in the green in the morning, continued to build on those gains, and the Nifty small cap index was up about 1% at close, whereas a mid cap index gained about 0.75% in today's trade. Now talking about sectors, Krishna, a lot of sectors, most of the sectors in fact on the NSE participated in today's rally, and Nifty Pharma, which was up about 1.2% in the morning trade, also ended about 1% higher at close. Another sector which saw a lot of buying interest was the FMCG sector. It ended about 0.8% higher. Other sectors which were also under pressure in the morning, like Nifty IT, also gained momentum after Morgan Stanley raised target price on several blue chip IT stocks, and as a result the index was able to manage ended higher, about 0.4% higher in today's trade. Now the banking pack, Krishna, was under pressure. It has been one of the underperformers in the last few weeks. We saw a correction of about 3.5% in the banking index. Even today the banking index was subdued. It ended about 0.08% lower. Now among the stocks that were in action today, let's talk about the gainers and the losers quickly. Among the gainers today, Krishna, was L&T. Now L&T, which has been on a bit of a bull run in this financial year, has rallied about 20-25% since the start of the financial year 2024. Took some bit of a breather earlier in the month. It has once again started on its bullish trend, and the stock was up about 2% in today's trade. Coal India, which is also on a fairy tale run, was in the news today, and it was up about the stock was up about 1.8% in today's trade. ITC, Cipla, LTI, Mindtree were also some of the gainers among the blue chip stocks. All three stocks rallied from 1.3% to 1.5% in today's trade. Now among losers, Krishna, was Titan. Titan dropped about 1.4% in today's trade. Now a lot of brokerages have shared a bearish call on the stock after the recent run up. According to them, the valuations, at least as of now, seems a little bit stretched, so perhaps the counter is witnessing some sort of a profit booking. It was down about 1.4%. Other stocks that were down today was Grasim, Hero MotoCorp. Hero MotoCorp was one of the top gainers yesterday,
along with the two-wheeler story in trade yesterday
in two-wheeler stocks. Now that saw some profit booking. It corrected and fell about 0.9% in today's trade. SBI was the sole counter among banking stocks that was under pressure today. In fact, ICICI Bank also witnessed some selling and ended among the top losers in today's trade, down by 0.7%.
Right, that's a quick wrap-up of the day's trading session from Suyash. And Suyash, we're only happy to wrap things up that early because we have a very, very special market expert joining us live on the broadcast on this edition of Business Plus, which is none other than Mr. Ambareesh Baliga, independent market expert, who joins us live again. Thank you so much, as always, for taking time out to be with us. Directionless markets is what it's been, Mr. Baliga, off late, but good end to today's trading session for sure, after opening in the red, closing up over 200 points on the Sensex.
Absolutely, because even earlier I had mentioned that 90,500, 90,600, this band is a very good support level for the markets. And in case we break this, we could see a very steep fall. So fortunately, for today, we have actually taken a very good support at these levels. And from there, we saw a decent bounce back. Now, I mean, I've been looking for reasons for this bounce back. I'm not finding too many reasons as such, except for the fact that, I mean, there's a decent amount of I mean, one can talk of value buying or speculative buying at those levels because we have seen a decent correction in the last few days. So I think that could be the only reason because if you look at the data, the red flags are still there. I mean, you still have the oil prices going up. I mean, we're quite sure that Fed would increase the rates before the year end, which is again negative for the Indian markets. And at the same time, you will also have the earnings for Q2 starting in the next 2 weeks, and the expectations are decently high this time. So disappointments could be there, very much possible. So looking at all this, I don't know as to how much the markets will bounce back, but yes, I think for the time being, we are in that bounce back zone, and we could see the markets moving up for a day or two more.
Right. One other thing that I've noticed, at least for this morning's trading session and the close, is that when Mark Sensex Nifty was down in the red about 0.5% in the morning, you had mid caps and small cap indices up 0.5%, and they've again gained another 0.5 or more percent during the day's trading session, with Nifty and Sensex are up about 0.3, 0.4% for the day. You have the mid caps and the small cap indices up nearly 1% for the day. Are we clearly seeing a trend here where in a directionless market, value buying that's taking place in the mid caps and the small cap stocks?
No, I don't know how much of value buying can actually happen in the mid cap and the small caps because most of them have already run up quite a lot. And whenever you have such a large move in mid cap and small caps and the amount of interest which we see, it is very clear that it's the retail and the HNI crowd which is there more than the I mean larger funds or institutions because they normally don't look at small caps. So I mean since I mean this part of the investors which are talking of retail and HNI mean, they have made decent amount of money from the small cap and the mid caps in the last couple of months. So it's quite natural that they will keep putting money in. I mean, whenever they see a correction, unless of course, I mean, the correction is huge and which can actually start a panic. But till then, you'll have these people coming back and investing. I mean, fresh funds because every time they have invested, they have made money. And I mean, we should always remember that here the memory is quite short. So what they have seen in the last 4 or 5 months, that is what they follow.
Now, Mr. Baliga, as you said that Indian markets, on the back of today's run could perhaps continue the rally for the next couple of days. Now, what will be the near-term resistance levels according to you?
I think the resistance clearly is at closer to about that 20,000 levels. I mean, where we had crossed last time, and then we saw I mean the correction from there. I mean, when people started talking of about 20,500, 21,000 levels, that's when the correction really happened. So right now, I mean, broadly, you can say that the markets would be in this range of 19,500 on the lower side to about 20,000 on the higher side. But like I said, I mean, if we break this 19,500 levels, we could actually see a 750 to 1,000 points sort of a correction from there.
Mr. Baliga, Indian markets are definitely looking up and up, even the commentary coming from a lot of brokerages. In fact, a lot of global brokerages has been positive. Now, JP Morgan said that, valuations, even though our stretch seems justified at this point in time, even Nomura, the Japanese brokerage, upgraded India from, to overweight and has given buy calls on several stocks. But the market, the global equity market continues to reel under the pressure. Now,
Right.
I was reading. Sorry, sir.
Yeah, continue.
Yeah, so Indian markets has been an outlier. Now, one of the news that I was reading yesterday was there is expectation that US economy could face some sort of a situation of stagflation, where we have seen growth moderating probably over the next couple of quarters, and inflation and the prices remaining elevated. So, in your opinion, are we staring, at least in terms of global markets, at a stagflation sort of a scenario?
Very much possible, and especially when that happens, I mean, you will have the global markets correcting, and against that, you cannot have the Indian markets moving in the opposite direction. I mean, being a bright spot as far as the global economy is concerned, we could outperform. But outperformance does not mean that we will move in the opposite direction. You will have the global markets coming down and the Indian markets going up. I think that's not possible. I mean, it's possible in the short term, but slightly if you're talking about medium term, that's not very much possible. So, I mean, that's another reason again why our markets should see a correction. And when we are talking of valuation, if you're talking of the large cap and the blue chip, I mean, I won't say it's too stretched. I mean, although the valuations are decently high, but it's not very stretched. But when you look at the valuations of the mid cap and the small caps, I think they are quite stretched. And I mean, if you just look at the SME index, I mean, that has moved up from where? About closer to about 100, 200 to about 1900 levels. So, I mean, there again, quite a few of them have become multi-baggers for not much of a reason. And recently, even the regulator has, come down quite harshly on that. And in fact, they're looking into as to why, I mean, these stocks have moved up so much. So I think clearly there are, I mean, a lot of red flags around.
Right, talking about red flags, crude oil certainly a red flag, Mr. Baliga. You're set to have where Russia and OPEC together massively cutting down on over 4 billion barrels of oil per day of production. This is the biggest cut in oil production in the last 2 decades, barring recessions. So that is a red flag that both Indian and global markets will be, quite worried about.
So just to jump in here, the 4 million cut has not been announced yet. There are certainly reports,
right.
But currently the 1.3 billion cut is still active.
Fair enough. But the point is that we are looking at a situation where there are possibilities of a 4 billion barrel per day oil production cut, which which would be then the biggest in 2 decades.
Absolutely. I mean, at the same time, we should remember that the whole of last year, last 12 months, I mean, we had the benefit of a cheaper Russian crude as compared to the, normal your Middle East crude, which is to buy. And Russian crude had become, I think, closer to about 40% or 45% of our basket. And because of which, our combined price was lower than expected. But now with the Russian crude also moving up decently well, and that discount not really being available for us, clearly the combined price, I think, will surely be much higher. And I think that's what is going to hurt us much more than anything else.
Now, Mr. Baliga, as you said, India continues to be in a bright spot in the longer term, but you expect some sort of a correction in the medium term. Now, as Krishna rightly mentioned, crude is a pain point. What are some of the other factors, in your opinion, that could, perhaps pull the Indian markets downwards and could be an overhang in the medium to, near to medium term?
Like I just mentioned, possibly the earnings. When we talk of earnings, it's always expectations versus what is delivered by the companies. And now between the last time the earnings came out and now, the markets are at a much higher level, which clearly means that the expectations from the earnings also would be high. So when the expectations are high, the chances of disappointment, also is much higher. So, in case we see any disappointments, that could be one of the reasons. The other one would be as we, get closer to the next Fed hike. That will also possibly have a decent amount of pressure on the Indian markets. And last but not the least would be monsoons. Which are more or less getting over now. Although we may have the total rainfall more or less slightly below normal. But then the issue is not in the quantum of rainfall. The issue is, clearly on the distribution. And we'll have to see as to what sort of an effect it has on the rural economy overall, and at the same time on the food inflation going ahead.
As you also mentioned, earnings season could perhaps dictate the near-term momentum in the markets. Now, as you also said, that earnings season is quite upon us. It kickstarts in the next couple of weeks or so, with Infosys coming out with its earnings, or on October 12th. So, what are your broader expectations from the Q2 earnings of India, and any sectors that could perhaps outperform, and any sectors that could play a spoilsport?
I think the sectors which can outperform clearly would be your auto, where we are still seeing extremely good demand. Cement could be, I think, one dark horse in this earnings season, because what we have seen in the past couple of quarters is that we are seeing that the production and the sales have in fact gone up, but the realizations had not gone up. But in the last couple of months, we've been now seeing that the prices are going up, the cement prices are going up. So because of which, I think the margins would be higher this time for the cement sector. So that will be, I think, a surprise for most of us. Where I see, weakness continuing could be metals and even IT to a certain extent. I really don't see a major revival for IT in this quarter. Possibly we could see some sort of revival in December or maybe in March next year. So I think we have another possibly a quarter or more to buy into IT, but this may not be the right time to start buying.
Now, before we talk about IT stocks, I also want to quickly touch upon the auto pack. You are bullish on the auto segment. Now, two-wheeler stocks, Mr. Baliga, which were reeling under the pressure of inflation and lack of demand, especially from the rural parts of India, has seemed to be like they are turning around a corner. And in fact, a lot of these stocks have given good returns, double-digit returns in the last couple of weeks or so. Now, a lot of brokerages are saying that the entire two-wheeler segment is moving towards premiumization. Therefore, perhaps stocks like Eicher Motors could be one of the picks. What are your picks, sir? What are you picking in the two-wheeler segment?
In fact, I don't have too many picks in the two-wheeler segment. In fact, my pick out there would be TVS, but I'm more bullish on the passenger vehicles and the HCV, LCVs segment. So my picks clearly would be Tata Motors, Ashok Leyland, Maruti, and Mahindra and Mahindra.
Now, let's also quickly talk about the IT pack. Now, IT pack saw some buying interest after Morgan Stanley raised target price on a lot of these bellwether stocks from Infosys, HCL to TCS. Now, Morgan Stanley has said that it expects FY25 revenue growth to improve in light of the the recent acquisitions in order. We have seen Infosys landing orders worth $5 billion or so in a matter of couple of months. So perhaps the expectation is that IT sector could see some sort of a reversal and perhaps emerge as a contrarian bet. What's your opinion, sir?
Well, like I said, possibly we could see the revival starting from December or maybe March of, March 2024. So, whatever report has come out that FY25 could be better, yes, I think FY25 should be better than FY24 and FY23 for most of the IT companies. But then when you see that the earnings are more or less flat or slightly negative, quarter on quarter, for the next 2 quarters or next 1 quarter, I think it will have an effect on the stock prices. People may not look at FY25, but then what's happened immediately. So that could be a buying opportunity. That's why I'm saying that possibly the next 1 or 2 quarters, you could see most of the IT stocks correcting because of the earnings. And that should be utilized to buy because if you're talking of FY25 and FY26, I think the scenario looks much better.